Well, it is the best of the gains in PSUs over. Most of the PSU stocks, I won't say most, when I say the defense, railways, some power names, they've retreated 15, 20, 25%. That's the average decline from the recent high. That data will put it up, that how some of the PSU, defense, railways and these stocks have moved. Now PSUs are moving up largely because of a post COVID they had become very cheap. They had not created a lot of wealth, which is that they entered into a 10-year price-wise correction, and then came the government push on expenditure front, on Atmanirbhar, on defense, on railways. All these factors put together, PSU stocks have had a stellar run post-COVID. But is that now behind us? If it is, then what is the best way now to approach PSU stocks? Taher Badshah, CIO with Invesco Mutual Fund, they also have a PSU fund. It was timed very nicely when it was launched. But now let's understand how is that fund being managed, and in general, is the party over in PSU? So Taher, at this, the introduction was the question in itself. Since you're managing PSU stocks, how are you approaching them given that a time-wise and a price-wise correction has kicked in?
Hi, good morning, Nikunj. Thanks for having me. Well, regards our PSU strategy and our PSU fund is concerned, basically, this is a strategy which has been around for a very long period of time. We've gone through almost 14, 15 years. So we've seen several cycles and, different kinds of market conditions. And at one level, we all know that PSUs for a fairly long period of time were kind of ignored by the market, and valuations were where they were at a very steep discount to the rest of the market, maybe 60, 70%, 80% at times as well. Um, uh, uh, but I think in general, I mean, this is a space which at one level is somewhat, uh, of course, we all know that it is linked to the investment cycle, but it is also somewhat narrower in terms of its available opportunity set. We are essentially dealing with sectors which are, let's say, for example, industrials, commodities, banks, and utilities, for example. This makes up the bulk of the PSU space by and large. And I think it is important to probably think of it from that standpoint, that if you want to manage a PSU fund from a somewhat medium to long term perspective, I think it is important to a uh, uh, be at the right side of the cycle for various sectors. So you might have to probably, even here, uh, uh, be very active in terms of sector rotation. And unlike in the other parts of the market where you have probably more sectors to deal with, here you are somewhat narrower in terms of your available set. So I think it becomes very important to judge some of these three or four sectors and the cyclicality within. The other thing is at various points in time in the past, especially before this whole PSU wave started to unfold in the last 2 years, it was very important to actually deal with PSUs from a point of view of even balance sheet and see as to which were the businesses which were relatively less capital intensive compared to the others. And I think if you did a good job on these two scores, then you would probably end up with a reasonably decent performance, despite the fact that the space was lacking excitement. So, for example, our own PSU fund, if you look at it, um, 3 years back or 4 years back in 2020. And if you were to look at the prior 5 year or 7 year performance up to 2020, you would find that we have actually even beaten the Nifty during that period, which is quite an achievement, I would say, especially in a space which is somewhat constrained and did not really have any tailwinds. So I think on an ongoing basis, we might probably have to, be a lot more cognizant of that. Of course, we've had a very good time in the last 3, 4 years given the PSU tailwind, but that obviously may not necessarily last forever. Although I would like to think that valuations may now not be as much at a discount as what they were in the past, and you might still see some reasonably decent performance, provided you are able to manage the fund well and you have a well-defined approach.
So what is cheap in the PSU space? What is expensive in the PSU space?
So we all know, some of the industrials definitely by definition have turned expensive across the board, whether it is in the private sector or in the PSU category. So that's clearly, and especially within that, uh, uh, defense is obviously the one which we can easily call out. Where valuations did have become relatively more extended. They have seen some correction in the recent past, but they are still somewhat elevated. We might probably see some more downside out there, and a few of the other industrial names as well, where we probably still feel a little more comfortable. Let's say something like utilities, power utilities is somewhere where we feel that valuations are obviously not of the order that we used to see 5 years back and 7 years back, but somewhat relatively more comfortable compared to the others. There are certain, you know, uh, pockets of the oil and gas space also, which appeal to us. And let's say, for example, oil marketing companies might still make the cut from a valuation standpoint. So I think these are places where we might probably find something. Materials as a commodity pack uh, can be argued to be cheap, but the thing is that we still do not really see any great excitement from the point of view of where we are in the cycle on materials. So valuations there are probably a little more comfortable, I would say, but we'll wait for the right opportunity in order to ensure that we time the cycle right in that sub segment. So I think that is where we probably find some value. Financials at some level can be said to be getting a little cheap. In fact, actually, if you notice in the last some time. The drag in the PSU index apparently has been more caused by the performance of, or the underperformance rather, of the PSU banks in general as a pack. Defense, of course, has corrected from its peak, but on a 3 year and on a 3 month and 6 month basis, defense stocks still are not as bad. So they have kind of retreated from their peaks. But if you look at PSU banks, their underperformance now extends to even not only 3 months but even perhaps 6 months. Um, so I think a relatively somewhat more damage has been caused to the index at an aggregate level by the lenders, particularly the PSU banks.
Okay, fair enough. So, what is it that you believe is going to be now some of the key triggers? Because one would say that to a large extent, everything that had to play out, or all the positives, be it the capex plans, the kind of order wins for select companies, that has already been factored in. So, going down the line, what are going to be the important triggers for these companies?
So true that, yeah, those broad triggers, obviously, from the point of view of the whole space moving up and the valuation tables expanding throughout the PSU spectrum, irrespective of the sector that they belong to, is perhaps behind us. And we now have to deal with uh, the delivery on earnings. And so what essentially will happen, and this is how cycles unfold across, is that, we have that first flush where everything gets re-rated, and then once the dust settles down and you get into actually the second phase. The second phase is typically where execution, performance, delivery starts to come in. So I think that is what will probably happen in the PSU space, particularly in the industrial space, stroke the defense subsegments of the industrial space. You will Markets will start differentiating between good quality execution and not so good quality execution. Many of these, as we know, are sitting on very strong visibility of top line, but we still to see very strong execution. They've also been very strong beneficiaries of uh, commodity prices being lower and very, very strong margin expansion, which has confounded much of the street in the recent past. So I think uh, that also needs to be watched. Although right now India is still in a favorable position from a commodity standpoint, I don't know whether that can act as a additional trigger, but that is something which might probably continue as a benefit for us. Um, so I think now it will be up to individual earnings delivery across the board, different segments. We'll have to cut it across and see how peel off the cover, and then try and judge as to which companies can probably stand up and which cannot. Policy reforms, I agree with you. I mean, bulk of it is done, so you can still see maybe a little bit of relaxation if on the financial side and on the banking sector, if the regulator has been somewhat more uh, harsh, so to speak, in the more recent past, and very particular. I think if credit conditions start easing a little bit, then maybe the banks can probably come back, and that could be some bit of a trigger and make for a reversal as far as financials is concerned, especially the lenders. So I think, yeah, but I agree with you. I mean, there's not really a lot lined up in terms of triggers. It'll be on individual merit and earnings delivery. To that extent, at least they're still not as expensive compared to the rest of the market as a pack. The PSUs are still at a discount close to about 40-50%, maybe not the 70-80% that we used to see earlier, but still a reasonably strong discount compared to the rest of the market.
All right, appreciate your time, Tahir. Thank you so much for giving us an overall viewpoint of PSUs as a sector and what the valuations command, what the outlook is, and the key triggers down the line. Tell you what, we'll take a very quick break with news that for now, the index is holding out at 25,074. We'll be right back with Chartbusters and more.
If you like this video, then like, share and subscribe to ET Now.